I think I might have some connection issues. I don't know what's going on with my service. Can you hear me, Eric?
I can hear you. Can you hear me?
Yeah, I can hear you. Well, hopefully everyone out there can hear all of us. So we got Eric today to talk about rates, but also talk about individuals that work in the cannabis space and are looking to get a loan and buy a property. Hey, Eric.
How's it going, everybody?
Why
So, do you
don't you
want to just
talk a little
start
about yourself?
jumping? Yeah,
Jump in.
I've been in the industry for 16 years. Actually, known Vinnie here for quite some time, and work for a company called Prime Lending, and we lend nationwide. So, no matter where you are watching this video, we can essentially help you. Just throw a dart on the map, and we can lend there.
All right. How are rates looking right now?
Actually, they're going down over the past, I'd say, month and a half. We've been seeing trickle downs in rates. I haven't been seeing them go up. They've been just going down. So I just locked a loan, FHA, around a 630 credit score, so not the best credit score, at 6.625, I think, with no points. So that was pretty good. I've been seeing low sixes for high credit score borrowers, and then I'd say low sevens, high sixes for conventional borrowers.
All right, so what are some things that are different or people have to be aware of if they're working in the cannabis space when buying a property? Are there particulars that they have to be aware of?
Yeah, so there's been a lot of changes in that space. It's actually a very special one to me personally. So I focused a little bit on it. So there's a couple differences in the cannabis space, right? So there's owner operators. We're talking about people that actually touch the plant, right? Growers, processors. You're talking dispensary owners, people like that. And then you have employees of those large, let's say, companies or little companies of the cultivation side and then the dispensary side. So each one of those is treated differently nowadays. Being that it is a federally illegal substance, guidelines have changed throughout the course of the whole cannabis type, I guess you can say, surge or legality. But to touch on it, go ahead.
So as an employee, nothing. I think you told me right. Nothing changes, right? As an employee, you're getting paid a salary. But as the owner, can you? Because I know there's some program out there where you can buy using basically your business or use basically that kind of stuff. So how does that work if I guess it's federally not approved and you can't really bank at some banks, right? Is that how that works?
Correct. So that is a challenge actually in the cannabis space. Now, the legal operations typically can get a bank, and they do have, like, if you were to walk into a dispensary, you can use a credit card, right? And charge that. So that money has to go somewhere. So for example, for business owners, we want to see bank statements for qualification. So if it's a cash-based cannabis operation and they're not depositing any of the money in a bank, we can't prove that they're making any income, and therefore that person may not qualify. But if you've got a dispensary owner or cultivator that's selling their stuff to, let's say, a store or whatever it may be, and depositing those funds, that income can be used for qualification under bank statement, self-employed type home loans.
What happens with the rate on programs like that? Are you affected by the rate? Are you getting a higher rate?
Great question. So again, those W-2 borrowers, let's say, or self-employed that qualify traditional are eligible for regular. But the stuff that we're talking about today, yes. So typically you'll see interest rates be about, I'd say, about 2% higher than whatever the market rate is at that time. So if the market rate is, let's say, 6.625, you may be looking at 8.625 for a similar scenario.
Okay. Now, so if let's say if you have your business, you've been doing the cash stuff, and you haven't put it into, I guess, the banks, but you're looking to purchase in a year from now, 2 years from now, what's the best way? Do you know some banks that are best to basically hold the money into, or how does that look?
I don't know what banks are cannabis friendly. I think a lot
Yeah.
of them are becoming friendly, depending upon obviously the state that you reside in. I mean, gosh, I think we're going up on something 30 plus states now that are legalized. So I really don't know that side of things. Honestly, like I kind of mentioned to you before, a lot of the cannabis operations are, they're looking for financing for their facilities. What they may be doing for residential, which they need to know there's an option, right, to get a home loan, but they may be buying homes cash, right, instead of utilizing that cash for, let's say, expanding their operation. They can now get a loan, 1 million, 2 million, all the way up to $3 million on a home, and then save that money and put it into their cultivation facility or whatever it may be.
What about mixed use? How does that work? With is there any kind of nuances in the cannabis space? I mean, where you're maybe have a dispensary or something like that, but you also reside in basically the back unit, or how does that look?
That's going to be commercial financing for sure.
Okay.
Any type of operation that has cannabis, let's say, related is high risk, because I mean, you're talking, for example, on the cultivation side, mold, mildew, pests, things like that are involved, let's say, in a property. So if you've got, that, you're risking lending against, let's say, something like that. Same thing with processing. Some of those equipment that is used is explosive. It has explosive material in it, so high risk. I personally don't deal with that type of financing.
Well, before I get into the current, I mean, San Diego market, what we're looking like inventory, and if you're watching us right now, the clicker below, one thing to really factor in here is the detached under 700K in San Diego County. A lot more pending than active. If and we'll get into basically the median home price, everything like that, but something to look into as you're watching the clicker. But people watching right now, what's the best way of them getting a hold of you if they have questions? Maybe they have a friend, family member that's in that space, and they're looking for more information. What's the best way, Eric?
Honestly, I am such an easy guy to find. If you were to Google my name, Eric Sandstrom, my phone number is 619-379-8999. Pretty easy. But yeah, I'm pretty easy to find. I mean, if you were to reach out to, let's say, even you, Vinnie, and pass along my info, that's fine too. So
858-345-7829 is my info. But before we finish this off, I wanted to bring up some updated numbers to everyone. Okay, so median home price in San Diego, again, December, usually a little slow over time, has dropped, and that's across the board. It's so you're talking about a little above 800 for the median home price. Now the detached median home price is about 950. It went down a little bit, but with rates going down, right, you're probably gonna see that pricing go up. Lists of sold was pretty steady at 100, but again, December timeframe went, I mean, a little under 100 for list to sold across the board. List to sold for detached again went under slightly, under 100. But I mean, these numbers right here are going to probably go up with rates going down. So that time right there when you're talking about, let me pull that back up, median detached price, when you saw everyone saying, hey, $1 million to buy a home in San Diego, median detached price. And that'll probably, to what degree, will trickle back up. But where do you gauge? I mean, I'm telling people that I think rates are going to get down probably to the fives. Some people have said in the fours by summertime, maybe end of the year. What are your thoughts, Eric?
so hard to tell. I was, obviously it's election year. And historically, over the 16 years I've been doing this, every time an election year comes up, rates go down. Whether that's influenced, I don't know. This year is obviously much different. I mean, the feds obviously were boosting interest rates to increase the cost to borrow money, right, to fight inflation. So for them to immediately turn back around, let's say, a year and a half, 2 years later, and not seeing much difference in the market, I don't think is a very good idea, but I'm not sure the impact. I think that they might know something that we don't. And maybe there's something like, for example, if rates, to answer the quick question, my prediction is rates will go down next year. Yes, because the Feds have announced it. I think
it was like a maze. I was following this maze right here, and I was like, okay, where's he taking me? Where's he taking me? And then in line, he goes, yeah, I think rates are going to go down. But you know what? Again, these are assumptions. These are assumptions. I mean, no one has a crystal ball. I mean, if you probably listened to other people last year, you probably heard some lenders, and I've heard some lenders that said rates are going to go down. Even when we're at 3%, I remember hearing some lenders saying the rates are going to go down, right? So it's truly an assumption based off of past history, right? Based off what the Fed said, things like that, right? So no one has a crystal ball. We're kind of assuming, so we can say sorry.
And then the other thing too, Vinny, is what happens to home prices if rates go down now? Everybody is really saying it's going to increase buyer demand, right? And then home values are going to increase and go up. Well, if you look at the other perspective of it, which I don't know if it's going to happen, but it will allow, for example, people like me that live in a home that want to upgrade and now see this bigger house, and I'm like, okay, now I can afford it because interest rates are lower. So that in turn, I may list my home that I have here currently, which will increase, let's say, what's the word I'm looking for? Increase
inventory.
Inventory. There you go. In there, and then in turn, home prices could stay level, maybe go down, but obviously that. The whole consensus is it's going to go up, right? Just like you said, crystal ball, there is none.
No one has a crystal ball, but thank you guys for watching. Try to keep it under 10 minutes. We're a little bit over, but hopefully you got some great information here. Have a good one. Feel free to reach out with any sort of questions. Bye, everyone.